Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have here Jeff Nielson. He's at Bullion Bulls Canada. Thanks for coming on again, Jeff.
Always nice to be here.
Okay, the last few months we've been noticing these crazy things from these central banks and individual countries as well. If you look at the United States, the last few months we've introduced QE3, and then next month we're going to have QE4, which is going to be outright monetization of treasury bonds. Now the Japanese are responding by saying that we want at least 2% inflation per year, just like Milton Friedman wanted. But the Japanese want to debase the currency, and we could see that in the Forex market. The yen is depreciating against the dollar. So, what are your thoughts about this shell game?
You know, where do you start? I mean, perhaps the best place is just with that horrible euphemism, competitive devaluation. And it just amazes me that these criminals can do this in plain sight and even declare what they're doing, and still the sheep just continue to snooze through it. What does competitive devaluation mean? Racing to drive the value of currencies to zero. You know, this is suicide. This is economic suicide, plain and simple, right out in the open. And, you know, the lemmings just continue to race along towards the cliff.
Yeah, I sort of look at it as a race to debase. And this is sort of a currency war. And all these Keynesians talk about, hey, we could print all of this money since the currency is denominated, or the debt is denominated in our own currency. Therefore, we can print our way out of it. What's wrong with this flawed philosophy that Paul Krugman talks about? Even though he says it's not the best thing to do, we could get away with it.
You know, again, you just have to ask yourself, where do you start? Perhaps the best thing to do is to back right up to the very absurd concept of the Keynesians in general and our central bankers in particular, that inflation is a good thing. Of course, the precise opposite is the truth. There's nothing healthier in an economy than a nice mild deflation where the currency in our wallet is actually appreciating in value, giving us more purchasing power and automatically increasing our standard of living. And instead, you know, we have these economic heretics, these con men and criminals telling us that what's in our best interests is for our purchasing power to be steadily and rapidly losing value, and of course, our standard of living plummeting with it. In real dollars, the U.S. standard of living has plummeted by more than 50% in just the last 40 years. And once again, you know, the sheep just continue to snooze through this, diluted by nominal numbers and, of course, the almost equally phony official statistics.
You did mention how you would rather have deflation, and I just want to add on that. No one wants to see deflation or inflation, but long periods of deflation is actually harmful, just like in the United States in the 1870s. You don't want that. If the deflation is maybe for a year or so trying to liquidate all the debt and then trying to get your act together, then that's fine, in my opinion. Would you agree with that?
Yes, there's definitely different forms of deflation. And obviously, debt default collapses and other purging of malinvestment are not necessarily the most pleasant aspects of devaluation. They're, of course, obviously necessary. That's one of the few things the Austrians get right, is the need to purge the bad debt at regular intervals to avoid allowing it to spiral out of control into these insane bubbles. But I would differ a little bit in what you said in terms of being content to experience a long-term deflation, provided it is mild and of benign nature. So, for instance, you know, when we see these Asian economies becoming manufacturing powers, but still very low-wage economies, there was definitely the potential for us to experience long-term deflationary effects from this rapid rise in productivity from these low-wage economies, churning out all these manufactured goods at very low prices. That would have meant all of our standards of living increasing, rather than just the bankers pocketing all the gains for themselves and actually driving our own standards lower with their monetary excesses. So there are circumstances where you can even have long-term deflations, and it's nothing but positive for the overall population.
Yeah, I think Hayek also talked about deflation's okay if there's technological process, and if you're trying to purge your bad debt, then that deflation is fine up to a period, but then you need to start growing your way out of it. But moving forward, I wanted to talk about, or I just wanted to get into one viewer question. It's kind of long, though. And he is AGAU121, and he writes on YouTube, I need help understanding a crucial concept from one of your articles. You state, calling the trillions in Bernanke bills funneled into Wall Street banks loans is absurd. Anything borrowed with ZIRP, zero interest rate policy, never seems to be repaid since there's literally zero penalty for failing to do so. And that's the end of your quotes. Apparently you wrote that according to him. Yes. And then he adds on, I see how paying zero interest rate makes the simple use of money free to the Wall Street banks, but I do not understand how it absolves them of the responsibility to repay it. Please explain.
Well, unless these loans have specific term repayment requirements, then what you've simply done is hand somebody a wad of cash without any interest at all, and providing absolutely no incentive for them to ever repay. There's only two things that ever provide an incentive for borrowers to repay: requirements of timely payments or interest on the loan. And if we know there's no interest, and I doubt very much that there's any sort of strict or onerous requirements in terms of time horizons. I'm sure that some of the ZIRP loans come with specific time horizons on them, simply because they want to disguise the theft to at least a limited extent. But I suspect that if we ever got a look at the Fed's books, of course they fight to prevent that at all costs, that we would find that a lot of this is simply open-ended handouts of free money.
All right, and then he continues by saying, the remainder of your argument rests on understanding this crucial concept, and is something that I very much wanted to understand because the ramifications of it are pervasive. So he just continued on there. But I wanted to move forward and talk about your thoughts on the 2013 election, but what's going to go on in the marketplace. Gold and silver seem to be hammered, in my opinion, if you look at the latest trends in the gold and silver market. Silver's around $30 an ounce as of today, thinly traded market. Gold's around $1,650 an ounce. Last year it ended at, I think, $1,550. So it didn't move up that much this year because there are a bunch of takedowns. So based on the fiscal cliff and then there could be a recession, do you believe that metals may just trade sideways and go nowhere at all? Because I think that cartel's trying to cap the price of gold and silver around the $1,900 threshold. Your thoughts?
It really depends on how you want to interpret the overall economic parameters. Excuse me. As I wrote in a recent commentary, I can't recall if I've discussed it with your audience or not, but I'll get into it again because it's relevant. When we see the money printing spiraling out of control like this and hyperinflation at least reasonably imminent, I pointed out some of the dynamics that take place as we get close to this point of no return where things spiral out of control. And the example I used was, just imagine if you're sitting holding an ounce of gold in your hand and somebody walks up to you with a big wad of Monopoly money. And they say to you, how much do you want for that ounce of gold? Do you want 1,000 Monopoly dollars? Do you want 10,000 Monopoly dollars? Do you want 100,000 Monopoly dollars? And you would just laugh, of course, because your response would be, well, all that paper is worthless, so it doesn't matter whether you offer me 1,000 Monopoly dollars or 100,000 Monopoly dollars. And, of course, this is the same phenomenon that will take place with our own worthless paper currency. As we get closer to the point of the hyperinflation event, the real difference in value between for example, a $1,000 bill and a $10 bill goes to zero. So if there's no actual difference in value between a $10 bill and a $1,000 bill or larger denominations, whether the nominal price of gold is $1,000 an ounce or $10,000 an ounce, it's the same. The prices have no meaning, which of course was the title of my commentary. So this is one possible interpretation. If people believe the hyperinflation event is imminent, then prices will simply lose any real meaning. They'll just be nominal numbers, totally disconnected from any fundamentals in the real world, as the currencies reach the point where they just go from virtually being worthless to glorified toilet paper.
I do agree that we're going to get inflation. I'm not sure if it's going to be hyperinflation, but I do realize that the central banks are trapped, because if interest rates do rise, the holdings on their asset side of the balance sheet would have to collapse, and thus the equity side on their balance sheet would also have to collapse, and thus the central banks would go bankrupt. That's a short way of explaining what would happen to the central bank. So
the economies
I can't
would go bankrupt. All the sovereign debts would default immediately, yes.
So what I'm trying to get at, though, is they're going to try to print and print and print, and wouldn't this eventually, or could they just push this down the road and come out with some sort of currency? Because they're experts at kicking the can down the road. I've noticed this. Because the system should have collapsed at least 15, 20 years back, but they've managed to allow this system to flourish. So your thoughts on that?
Well, I think that there's kind of the human inclination to assume that if something has been delayed, that it can be delayed further. And, from a simple standpoint of logic, it's actually, of course, the exact opposite. If we see something being delayed, then whatever the unknown endpoint is, which we can't know for certain unless we can, have our own crystal ball, that endpoint is getting closer. So whatever the maximum possible date before hyperinflation kicks in was 15 years ago, it's 15 years closer now. And of course, the thing is there's no demonstration of either control or expertise here. Rather, everything they're trying is failing miserably. We can see the parameters deteriorating rapidly. And so there's absolutely no reason to think that these people have any sort of long-term plan or the capacity to maintain the shams and scams much longer.
Yeah, we shall see what will happen, but in my opinion, they're just going to slowly but steadily debase the currency and come up with some sort of way to kick the can down the road, which I don't know how they'll do, but they'll probably figure something out. But anyways, before I let you go, Jeff, how can people follow your work again?
My site is bullionbullscanada.com, which I run with two other partners, and we provide precious metals commentary, mining information, and general economic analysis.
All right, Jeff, thanks for coming on again.
You bet.